Hi, greetings of the day. This is Professor Ramakrishna. Welcome to my YouTube channel Archaeversity. Along with this YouTube channel, I also run a website that is archaeversity.com, which provides a lot of free online courses on career oriented skills. In this lecture, I'm going to show you how to prepare a final accounts or a financial statements without adjustments. The preparation of a final accounts includes three accounts. One is a trading account, second one is a profit and loss account, and the third one is the balance sheet. So with an example, I'll show you how to calculate trading account and determine the gross profit, then profit and loss account, determine the net profit or net loss, and then a balance sheet to see that what are the assets and liabilities that the business own on a particular date. The data shown here says that the following is the trial balance of Mr. Deepak as on March 31st, 2020, and you are required to prepare trading account, profit and loss account, and balance sheet. So these three statements that you have to prepare. So first, what is that we do is we analyze each transaction, and we'll write a description where this has to be placed. So for example, you have a drawings. So this is shown as a liability in a balance sheet. Insurance is an indirect expenses, so this appears in profit and loss account. General expenses is again an indirect expense, appears in profit and loss account. Rent and taxes, indirect expense, appears in profit and loss account. And lighting for a factory, this is a direct expense, so appears in trading account. Traveling expenses is an indirect expense, so appears in a profit and loss account. Cash in hand is an asset, so appears in balance sheet, that is asset side. Bills receivable is an asset, so appears in a balance sheet as an asset. Sundry debtors is again an asset. Furniture is an asset. Plant and machinery is an asset, appears in a balance sheet. So opening stock appears in our trading account. Purchases also appears in trading account. Sales returns, so this is the returns from sales and appears in a trading account. We'll put a mark here because this has to be adjusted with our sales. So carriage inwards is a direct expenses, so appears in trading account. Carriage outwards is an indirect expense, so appears in profit and loss account. Wages is a direct expense, so appears in trading account. Salaries is an indirect expense, so appears in profit and loss account. Now coming here, capital is owner's equity shown on a liability side of the balance sheet. Bills payable is a liability that we owe or we have to pay, so liability. Creditors for whom we have to pay the money, so liability. Discount received is indirect income or income from other sources, so which we show as an income in a profit and loss account credit side. Then purchase returns, so we have to make an adjustment for purchase returns. This we have to adjust from our purchases, so here we have a purchases, so just I am putting a mark here so that this indicates some adjustment. Sales, already here we have a sales returns, so adjustment. Then sales returns, purchase returns appears in trading account and sales also appears in a trading account. So once we classify this, so first we prepare a trading account. So I'm not writing the names, so you can write the names of trading account of Mr. Deepak for the year ended 31st March 2020. Just I'm not paying attention on the format. So here on trading account debit side, then credit side, particulars and amount in rupees. So here also particulars and amount in rupees. So what is it we do is first we look at the credit side items. So sales is one, so we'll write as sales. This is 4,40,000. We'll write this in an inner column, and here when we put a cross mark, sales has some adjustment. That is sales returns 6,000. So 6,000 is the sales returns. So we'll adjust this. So this is going to be how much? 4,000 and 3 4 lakhs 34,000. And you have a closing stock here. Closing stock also appears in trading account as well as asset side of a balance sheet. So we have a closing stock here. What is the closing stock? 35,000. Now we sales we entered, sales returns we entered, then closing stock we entered. Done. Now coming to the debit side, all direct expenses and purchases are shown here. So first we pay attention towards our purchases, 1,60,000, or we consider the opening stock if it is there. Yeah, opening stock is there. So in a trading account, so opening stock, this is 40,000. Then you have a purchases. So once opening stock is entered trading account, we'll click. Then purchases 1,60,000. Then we have a purchase returns 8,000. So this also shows in a trading account. So your purchase also trading account, less returns, how much? 8,000. So this gives you 1,52,000. So any other account in a trading account. Now your carriage inwards. Carriage inward 7,200 is a carriage inward. Then any item in trading account, yeah, wages. Wages 84,000. So any account in a trading account, we posted all this. And here you can see lighting, factory lighting is there, 2,800. 2,800. Now just we look at whether all the items of a trading account is posted or not. So sales, yes. Sales returns, yes. Purchase returns, yes. Factory lighting, yes. Then you have a opening stock, okay, done. Purchases, right. Sales returns, carriage inwards, and wages, and closing stock. So we posted all the items. Now we balance this account, looking at which side we have a highest value. So approximately if you make 4,69,000 here, and this is around 3 lakhs. So we go with this one, 4,69,000, and here we balance this. So for that we take a calculator. 4,69,000 minus 40,000 minus 1,52,000 minus 7,200 minus 84,000 minus 2,800. So this equals to 1,83,000. So this 1,83,000 is your gross profit. So we'll write here as a gross profit 1,83,000, and we balance this account saying that 4,69,000. Now once we are done with our calculation of a trading account, then we move to the profit and loss account. So here we'll write profit and loss account. So the details are the same. Then onto the debit side, credit side. So we'll bring the gross profit from here to here. So our gross profit is 1,83,000. And on the credit side, we'll write other income. And on a debit side, we write indirect expenses. So from the other income, we'll see credit side, discount received is one amount that we have, that is 10,400. So we'll write that amount here. Discount received, how much? 10,400. Now coming to this side, that is on debit side, you look at the what are the items that appear in a profit and loss account, so which we mentioned as a P. So one is the insurance, 3,000, Then general expenses is again P, that is 29,000. 29,000. Then what is it? The third one is rent and taxes. Rent and taxes 14,400. Then we have a P is traveling expenses 7,400. 7,400. Then again we have a P here, it is a carriage outwards 1,600. Then you have a salaries 53,000. So once again we'll check. So here on discount receipt is the only income that we have, so we already posted this. And on expenses side we have 1 2 3 4 5 6 expenses. So we have 1 2 3 4 5 6 expenses. So that means we posted all the items to our profit and loss account. Then we balance this again looking at the highest side. So this is 1,93,400. So we balance this 1,93,400. And now we calculate the net profit. So 1,93,400 minus 3,000 minus 29,000 minus 14,400 minus 7,400 minus 1,600 minus 53,000. So this gives you 85,000. So your net profit is 85,000. Now this net profit we show on to the equity side of the balance sheet. Now what is it I'm going to do is here, instead of going for another place, just we'll write a balance sheet here itself, so that you can have a overall look at one place. So we have a balance sheet and we have liabilities on one side and assets on the other side. So first we look at the liability side. Capital 2,50,000. So we have a capital 2,50,000, and from this there are drawings. So here is a drawings. We deduct this amount less drawings. How much? 36,000. So this is 40,000. So 2,14,000 is the capital, and then we'll add profit here. Profit is how much? 85,000. So 85,000 is the profit. Then you have a bills payable. How much is the bills payable? 3,600. So we'll make entry for bills payable. And creditors is 50,000. Creditors 50,000. Pardon me for writing in a cross text. Now coming to the assets side. So we go in an order. So we'll have assets here. So cash in hand 12,600. Then bills receivable 5,000. Bills receivable 5,000. Then debtors 1,04,000. 1,04,000. Then furniture 16,000. Then plant and machinery 1,80,000. 1,80,000. Then any other item left out? No. Then you have a closing stock 35,000. 35,000. So I guess we entered all the items. We'll come to know whether our balance sheet tally or not. If there is any item is missed, then we cross check again. So here this is on liability side, 2,14,000 plus 85,000 plus 3,600 plus 50,000. So this comes to 3,52,600. So 3,52,600 is our liabilities. Then we look at our asset side, 12,600 plus 5,000 plus 1,04,000 plus 16,000 plus 1,80,000 plus 35,000. So 3,52,600. 3,52,600. So we are lucky that our balance sheet got tallied without much difficulty or much calculations or without much errors. But this is not going to happen in real time or not in your examinations. But the idea here is that you have to pay attention towards each and every item, do it in a systematic way. So as I did this here, first identify your accounts or each transaction, in which account it appears, whether it appears in a balance sheet, profit and loss account, trading account, then it's on the debit side or a credit side. Then whenever you post each transaction into relevant account, try to make a tick mark so that you minimize your errors. So here as we say that accounting is preparation, or accounting is recording transactions in a systematic way. So calculating that final accounts in a systematic way is also be done. Or in simple terms, your final accounts to be prepared in a systematic way by following a procedure. So if you keep on practicing the same procedure for a multiple times, then it gets accustomed, or you become a user to it. Then preparation of a final accounts will become very easy, and you can make it without a much errors. So errors may happen, but you can save time by committing limited number of errors and resolving it instantly. Thank you very much for watching this lecture, and in my another lecture I'll show you a different account, that is a financial statement with the different values, and how is it we have to handle the gross loss and net loss. See you soon with more interesting lectures.